Good evening, everyone. And my name is Vakar Khan. I'm the Equity Research Analyst at William O'Neill India. And I welcome you all to this week's Market Wrap. Without taking up much time, let's start with Nifty 50 chart analysis for the week. During the week, Nifty gained by 0.4% but remained highly volatile by oscillating between its key support and resistance. The major resistance for Nifty is around 16,400 and the support is near the recent lows of 15,735. Last week, we had shifted the market status to rally attempt as market was establishing a potential bottom, but a follow-through day during last week and even during this week could not be achieved. On Monday, Nifty found resistance near the 16,400 levels and made a bearish reversal candle from those levels. Tuesday and Wednesday, similar stories happened as Nifty started the day on a strong footing and traded in a positive territory for most parts of the trading session, but with a brief bout of selling in second half of the day took the index lower. However, Nifty found support at its 10 EMA on Wednesday and closed near the 10 EMA. On Thursday, Nifty started the day on a weaker note and for a brief time even traded below its 10 EMA, but recovered sharply on account of weekly expiry and managed to close 0.9% higher on higher volume as well. But this move did not qualify as FTD because the up move should be greater than 1.5% on volumes higher than the previous day. On Friday, Nifty had a positive opening, but 21 DMA acted as a strong resistance for the index for a brief moment of time. But the Nifty managed to close higher above the 21 DMA. The up move on Friday was strong of 1.1%, but again failed to qualify as an FTD. Now let's discuss how market indices across the globe are behaving in terms of the market status to understand the broader picture in detail. 4 weeks ago, 10 developed markets were in downtrend and 9 were in under pressure and 5 were in rally attempt. But after 1 week, the markets in downtrend increased to 13 and rally attempt markets increased to 10. A week after that, many developed markets staged an FTD and 8 markets were in confirmed uptrend and 13 were in rally attempt and only 2 markets were in downtrend. According to 26 May's market placement, the markets in confirmed uptrend has increased to 11, but US markets has not yet staged an FTD, and in the past 1 year, 3 FTDs have failed on the US market index. Now let's see how the emerging market indices across the globe are placed in terms of their market status. A few weeks back, 4 markets were in confirmed uptrend and 11 markets were in downtrend. However, a week after that, 9 markets came in confirmed uptrend and 10 markets were in rally attempt, attempting to stage their FTD. According to 26 May's market status, the count for markets in confirmed uptrend has increased to 10 and 8 including uh, has increased to 10 and 8 markets including Indian markets are in rally attempt. But markets around the globe have remained choppy and volatile and the fear of an FTD coming in and failing remains on the cards on account of global macroeconomic pressure. US Fed Reserve's latest monetary policy meeting minutes showed policymakers unanimously felt that 50 BPS rate hike would likely be appropriate at its upcoming June and July meeting to tame inflation, which was broadly in line with street estimates. Not the inflation, but the rate hike, the upcoming rate hikes for June and July is broadly in line with street expectations. There was a robust discussion on inflation, with officials strongly voicing their concerns about the hardship it's causing the Americans, as well as the risk that price increase will remain high. Some officials said that higher prices were hurting sales at some businesses as well. Beyond the initial decisions at the meeting to shrink the balance sheet by letting security holding mature, officials also supported eventually selling the fifth mortgage-backed securities, a move that will be announced well in advance, which will allow US Fed to hold primarily treasuries on their balance sheet. As the inflation across the globe continues to remain elevated on account of steep commodity prices, logistics problems pertaining has led to global central bankers, including RBI, hiking interest rates and squeezing off excess liquidity in the system to control the inflationary scenario. In these times, Nifty's chart becomes even more important to help us gauge a direction through these turbulent times. Nifty is still trading well below its longer term key moving averages such as the 50 and 200 DMA, which is not a good sign. A follow through day is still awaited to take the markets to confirmed uptrend. If Nifty is able to reclaim its 50 and 200 DMA in coming times, then FTD is established. The rally can be sustainable. But if markets remain volatile and choppy, the failure of an FTD always remains high. On the flip side, if market breaches its recent lows before staging an FTD, then the market will move back to downtrend. Thank you guys, and now is the time to take a break and enjoy the weekend. Hope you found this week's market wrap informative and stay safe and stay healthy.